NIO stock is up about 30% in the last month, and I think it is just the beginning. I will try to dive into some basic facts about NIO, its business model, road towards its profitability, and at the end, is this the right time to buy? Let me share my perspective about NIO stock on fire. Hi, my name is Sunny and I make videos that affect a common man financially. A quick smash on the like button will help me with the YouTube algorithm and it will be highly appreciated. Most of the EV stocks, including NIO, has been through a wild ride in the last couple of weeks. It had a huge surge in its share price in 2020 and in early 2021, and some people thought it might have gone ahead of its fundamentals. This year it went down to as low as $30, where it seems below its fair value. Nevertheless, it has got a huge potential. Anybody who is investing in the stock market for a while is aware of the fact the stock price will either be under or overvalued at any particular time. This is the nature of stock markets. Its recent rally of 50% growth over its yearly lows of $30 to about $45 on the day of recording made people think maybe it's going through a bubble territory right now. The $1,000,000 question is if this rally in this stock price is sustainable. It has a very distinctive and unique business model. In my humble opinion, I don't see it just as an EV company, but something more than that. And two major reasons according to me are: number one, battery as a service. This is something very unique to NIO, also called as BAAS service, where they have tried to separate the cost of the battery from the cost of the car. It being the most expensive component in an EV, so rather than buying a car with the battery, you can buy a car without the battery and rent it out on some sort of monthly installments. This will make their EV more affordable to people who are sitting on the fence because of the cost. NIO has its own battery swap stations. Here you can get your old discharged battery swapped with the new fully charged battery in a matter of few minutes, giving the company a predictable recurring revenue stream. Rather than building its huge network, they have partnered with state-owned oil giant Sinopec, who will build about 5,000 such facilities at their gas stations on revenue sharing model. A partnership with Ford is being worked out where it can use NIO's present and future such stations, thus monetizing its charging network. Number two, asset light approach. This is always a good idea in the capital intensive industry. Look at Apple. They don't have any manufacturing facilities. It's being done by their contract manufacturers like Foxconn. Apple basically focuses on three things: product development, marketing, and all important intellectual property. This is called asset light business model. This is what I think NIO is trying to do in an industry which is very capital intensive. It has got long-term manufacturing contract with state-owned JAC for up to 200,000 vehicles every year. So rather than putting in all that effort how to make cars and improving the process of making cars, it has offloaded it all to JAC while they can focus on product innovation and marketing. I think these are the two very distinctive, unique things in their business model which differentiates them from other EV manufacturers, including Tesla. No other EV maker except for Tesla are nowhere close to being profitable, which is understandable as they are at the nascent stage of growth. Unlike other industries, new technology companies often take little bit more time to become profitable, as the first preference is to get proof of concept and gaining market share. This is what exactly Tesla did a couple of years ago. Another pressing issue for almost all automakers is the shortage of chips, which I know may not be a long-term issue, but that has a dampening effect on almost all automakers right now, forcing them to lower their production targets. Right now, it has grown close to 100% from last year in the biggest EV market, China. At this growth rate, along with economies of scale, it's a matter of time when it becomes profitable. There are few things that are going good in the favor of NIO. It being a homegrown champion in China, naturally the government will try to support them over Tesla, an American company in one of the largest EV markets in the world, China. Nobody has a crystal ball who can tell what a particular stock can do in a short time, but if you take a long-term view about NIO, there is a high degree of probability that in couple of years down the line, you might regret not buying it at today's price levels. In short term, it might be facing some challenges, but the long-term growth story is still intact if you look at their growth projections along with cash in hand. I have NIO in my personal portfolio as I'm quite bullish on this stock for the long term, or some call it as a hedge against Tesla, at least in Chinese EV market. As a disclaimer, I'm not a financial advisor. Please consult one before investing, as I'm just a common Joe on YouTube making some random videos. This is my take on the topic. NIO stock is on fire. If you like the content that I make, please help me and my channel by liking, sharing and subscribing to it. Please feel free to write in the comment section about the topic I have touched based on today, and I would urge you to write if you want me to make videos about any specific topic. Thanks for watching. See you next time in the next video on your own channel, SunnySnippets.